Is the U.S. economy on the brink of collapse?
That's what we need to decipher today. Voice of Expertise, Danielle DiMartino Booth, reveals critical insights about our financial future.
And we'll dive deep into artificial intelligence-generated summaries that distill hours of analysis into actionable insights.
Stay tuned as we explore everything from a housing crisis to rising unemployment, arming you with knowledge to navigate these turbulent times.
Let's get started with Danielle's alarming insights on consumer confidence. Today, we explore critical insights from Danielle DiMartino Booth on the emerging challenges facing the U.S. economy.
Danielle outlines alarming trends such as the significant drop in consumer confidence and ongoing job cuts, contrary to mainstream narratives.
Danielle DiMartino Booth raises concerns that the U.S. has already entered a private sector recession.
She notes that declining consumer confidence and rising job losses reflect deeply concerning trends in the economy.
How does Danielle view the current state of consumer confidence?
According to Danielle, confidence is at its lowest since February 2021, signaling deeper economic troubles ahead. Danielle noted that job cuts are intensifying, particularly in the private sector.
What do these layoffs suggest about the wider economic landscape?
They indicate a critical strain on businesses, prompting many to rethink their operational strategies.
What is Danielle's perspective on the Federal Reserve's current actions?
Danielle argues that the Fed's policies are falling short and predicts multiple rate cuts in the coming months.
What does Danielle predict for the U.S. economy?
Danielle foresees rising unemployment and a visible recession, prompting the Fed to implement rate cuts.
In conclusion, what does Danielle recommend for consumers?
Danielle advises that consumers review their spending habits and prepare for ongoing economic shifts.
Today, we'll analyze Donald Trump's new initiative to lower housing costs, as detailed by Stephan.
Trump's plan highlights three main strategies aimed at easing the burden on potential homebuyers.
Stephan concludes that Trump's three-pronged approach includes revising building codes set by the Department of Housing.
Additionally, he notes the potential challenges posed by regulatory changes affecting overall construction costs. As Graham points out, Trump's proposals regarding building codes may raise home prices due to potential compliance costs.
Balancing energy efficiency with affordability remains a complex challenge.
Trump believes that reducing regulations will enable builders to create more affordable housing.
Graham notes previous policies that could counteract any potential savings resulting from deregulation.
Utilizing federal land could help address housing shortages.
However, Graham points out significant infrastructural and logistical challenges in developing these areas.
What insights do we have regarding future home prices?
Graham highlights that, barring major changes, slight price increases are expected, but will be minimal.
In conclusion, Graham believes there's significant uncertainty about the immediate impact of Trump's housing plan.
Indeed, he advocates for alternative strategies that may yield quicker results in improving housing availability.
Welcome back to Kitco News. Today, we'll analyze a thought-provoking discussion led by Danielle DiMartino Booth regarding the current state of the U.S. economy.
Danielle emphasizes that while mainstream media is focused on inflation narratives, underlying data suggests we may already be in a recession.
Danielle DiMartino Booth warns that we may already be in a recession, evidenced by a sharp decline in consumer confidence.
According to her, a significant percentage of Americans foresee a rise in unemployment, signifying considerable economic distress. Danielle points out the alarming trend of layoffs, especially in the private sector, which she interprets as a stark indicator of recession.
She notes that the reversal in CEO confidence is unprecedented, suggesting a challenging economic outlook. Danielle discusses how American households are changing their spending habits, evidenced by decreased discretionary spending.
She emphasizes that even essential spending is being affected, complicating the overall economic situation. Amid rising bankruptcies and layoffs, Danielle forecasts a challenging economic road ahead.
She speculates that the Federal Reserve may have to implement further rate cuts to address an evolving economic landscape. Danielle predicts the Federal Reserve could enact several rate cuts this year due to rising unemployment.
Such cuts could significantly affect borrowing costs for consumers and businesses during this turbulent period.
In conclusion, Danielle highlights the importance of watching economic trends closely and suggests a proactive approach to personal finances.
She stresses that both consumers and policymakers must respond quickly to these unfolding economic challenges.
In today's discussion, we're examining Zillow's latest forecast for the housing market in 2025, highlighting some significant challenges ahead.
Indeed, Zillow has revised its nationwide forecast down to just 0.6% growth this year, a stark change from nearly 3% projected earlier.
Zillow's analysis shows that the supply of homes is skyrocketing, causing sellers to cut prices significantly.
This surge in inventory has shifted many markets towards a buyer's market, with the highest price cuts reported in states like Florida and Texas.
According to Zillow, 34% of single-family listings have experienced price cuts this month, the highest rate in over a decade.
Areas like Arizona are experiencing price cuts of 36%, which signifies a serious shift in buyer dynamics. While the southern states experience declines, the Midwest markets such as Illinois and New York are still seeing price increases due to low inventory.
It's essential for buyers to understand that while some areas suffer, others are holding steady or even appreciating. Looking ahead, Zillow and other analysts predict that home prices could continue to decline throughout 2025.
If economic indicators suggest a recession, we could witness even sharper declines reminiscent of past market crashes.
Buyers are encouraged to watch inventory levels closely and look for substantial price cuts before making decisions.
Additionally, focusing on regions that maintain stable pricing despite broader market downturns may be prudent.
Today, we'll be reviewing FedEx's recent analysis regarding the ongoing challenges in the U.S. economy.
As FedEx highlights, tremendous weakness is building, particularly among manufacturers.
According to FedEx, their revised earnings outlook reflects a significant level of weakness and uncertainty in the U.S. industrial economy.
FedEx's findings indicate that demand for capital goods is waning, which reflects a lack of confidence among producers. FedEx recently announced lower earnings expectations, projecting flat revenue growth.
This marks a significant concession, reflecting prominent weaknesses within the industrial sector. FedEx reports that companies cannot pass on rising input costs to customers, leading to squeezed margins.
As a result, there are significant concerns about consumer spending and overall economic stability. The industrial economy, according to FedEx, is failing to experience anticipated demand growth.
This downturn indicates that producers are losing faith in future business prospects. FedEx warns that the ongoing economic uncertainty could curtail consumer spending.
The likelihood of a shift towards a more traditional recession is progressively increasing.
FedEx's insights suggest that consumers may need to modify their spending habits due to economic uncertainties.
Investors should evaluate their strategies to prepare for potential downturns in key market sectors.
Welcome to Wednesday Morning Macro. Today, we're diving into the market insights of Stephanie Pomboy. Stephanie, great to have you.
Thanks for having me, Adam. I'm excited to discuss what's happening in the markets.
Stephanie, you've highlighted the recent market bounce after a correction. What are your thoughts on whether the worst is behind us?
While there's been a bounce, I don't believe the fundamental issues have changed. It feels more like a temporary respite.
You mentioned corporate credit issues. Can you elaborate on what CFOs are feeling?
Yes, the CFO survey shows increasing pessimism regarding investments, driven largely by tariff uncertainty.
What do current consumer sentiment surveys indicate?
The University of Michigan survey shows considerable concern among consumers, suggesting weaker spending ahead.
How is the outlook on corporate earnings shaping up?
We're seeing downward revisions, which is a negative signal for equities.
What should investors keep an eye on moving forward?
Without clarity on economic policies, we might still face significant challenges in the markets.
How can investors safeguard their portfolios in this environment, Stephanie?
Stay informed on economic data and market sentiment, and be prepared for volatility.
Wow, what an eye-opening discussion we had today, right?
Absolutely. Each guest brought their unique viewpoint that really adds depth to our understanding of the current economic landscape.
It's fascinating to see they all agree on the significant challenges ahead, but their predictions diverge wildly.
Exactly. For instance, Zillow's forecast of falling home prices starkly contrasts with FedEx's more nuanced view on economic growth.
And both Stephanie Pomboy and Danielle DiMartino Booth presented critical concerns about corporate credit and consumer behavior.
Right. The mix of perspectives from corporate giants and economists offers us a comprehensive understanding of where we might be headed.
And let's not forget Donald Trump's proposals on housing costs. Do you think they're realistic?
That's a great point. It'll be interesting to see if those strategies can really make an impact.
If you found these insights valuable, please like and subscribe.
Your support helps us continue to explore these essential economic topics.
Don't miss our upcoming video where we'll tackle global trade dynamics. See you next time.